Hi, good afternoon. You're watching Closing Trades right here on ET Now with me, Aisha Faridi, Ajay Sharma in the studios along. And today you can perhaps solely blame it on HDFC Bank. That alone is weighing heavy on the indexes. A 2% fall yesterday, another 5% almost on HDFC Bank futures, and that's single-handedly weighing heavy on the markets. So net result, we're down about 67 points. We are sub the 24,300 mark. I mean, no reason to complain or get alarmed. But yeah, when such a giant, and especially the one which just about started moving in the last month and a half, falls so much, the quantum of the fall has been so steep in the last 2 days, that's bound to bring about a little bit of a shake-off. And little bit it is because, not like the other banking peers are falling too much. IndusInd Bank is less than 1% down. ICICI Bank still very resilient. It's at the session lows, but it's less than 0.5% lower as we speak right now. Flat for Infosys, marginally soft for TCS. Axis is actually in the green. So is the case with the Kotak Bank. L&T, ONGC is your top mover today, almost to 4% tear on that stock. And now you're really seeing the entire pharma pack see new leaders emerge. Yesterday was Lupin, today it's Divi's Labs. That's holding up 2.5%. Laurus, Oro, Glenmark. Pharma is the one which clearly seems to be the flavor of the fortnight.
In fact, Aisha, if you just exclude HDFC Bank for a moment, in fact, I was thinking, where are those buyers at 3 billion, 4 billion positive MSCI, all of that? That's the fickle nature of the market, right? Especially the short-term traders. Still, that buying would emerge. But one would not want to, because the trade, as we spoke in the morning, we were discussing in the morning that 1450 to 1750, that trade, one leg played out. Now people would see how much of this weakness in Q1 updates actually translates into the first quarter numbers and what the management have to say. Now that trade is getting squared up and there are no takers, 5% lower. But the rest of the market doing very well. In fact, look at how defense stocks have come back once again. Just the afternoon, Defense Minister Rajnath Singh tweeted as well the progress made on defense exports. So this is one side of the globe, of the entire ministry, which is making very good comments and data, backed by data, that this is the progress. He started off 100-day agenda, 50,000 crore per year. All right, let's listen in to the biggest event of the day, the CNG bike from Bajaj. I think the management is talking right now. Let's hear it out.
It will be immediately available in Maharashtra and Gujarat states, starting with the disc LED variant, followed by the drum variants in a month from now. Freedom will be made available to all other states in the country in a phased manner by early next quarter. Bajaj Auto is the world's most valuable two-wheeler and three-wheeler company. It is possibly the only company which can marry the deep expertise of motorcycles and CNG technology. With Bajaj Freedom, the world's first CNG motorcycle, we have a pioneering innovation for the Indian commuter.
All right, so that is the the big event of the day, and the no stopping for Bajaj stock. In the morning we were discussing that whether now the news is out, will it top out, but doesn't look like, 1.5% higher. Other stocks are doing well. Commentary coming in that in the next 5 years, Mr. Gadkari was making a point, India would be the largest auto market of the world. That brings me to the question, if the auto market is, in the 5 years will be the largest, what happens to the auto ancillaries? Because a lot of people are playing this theme via the ancillaries, and we'll talk about that. But just to finish that point, the commentary from Defense Ministry today is a very important one, sparking rally in defense stocks once again, or aiding rally. It all started some time back. Beyond that, small cap, mid cap index needs to be mentioned. Look at the intraday graph. So if you look at Bank Nifty and HDFC Bank led fall aside, if you keep that aside for a moment, you will see it's a very active market out there. Kunal Nuresh are also here. Guys, how have you traded, Kunal, this afternoon, today? What was your setup like and how do you see it?
So, I think, yes, HDFC Bank is one of the major reasons why, and just to put a point-wise number, it's contributing or, taking away 188 points from Nifty. We're still down just 65 or 70 points on the Nifty, which means most of the other stocks are trying to offset the losses from HDFC Bank.
What level would you get back in? Around 1600?
So I think rather than level, you have to wait out for that intraday turn for HDFC Bank. That will be a price level. So maybe it can come closer to 1600 levels, because that's where psychological, traders would start to kick in, and that's where option traders would want to protect the key levels for the indices. So not specifically a level, but I think 1600 could be a good benchmark there.
All right, Nuresh, what about you? How are your trades looking, and what's the setup looking like right now for the weekend?
So there is a shift in terms of rotation. We've seen Pharma that we've been discussing for the last few sessions. It started off with mid cap and the small cap names like Granules breaking out. Today we are seeing Laurus break out. And now we've started seeing even the larger names. So yesterday it was Lupin, today it is DBs as well as Aurobindo Pharma and Sun Pharma. That is one segment of the market which is doing well. Other is oil and gas, which is where we are seeing ONGC make a new 52-week high. You have the other gas names which have continued to do well, which is IGL, MGL consolidating. You're looking at a Petronet hit a new 52-week high. So these are two sectors which are coming up. And on the other end, even a Reliance Industries is closer to an all-time high. But HDFC Bank itself is impacting the index, and it's seen a round robin in terms of the way it has gone up and gone down. So a couple of days back, it was the largest contributor. Today, it is the largest contributor on the downside.
Yeah, it sure is. But Kunal, whenever that turnaround happens from that 1600 mark, which you think could be a close bottom, how soon before we get back to that all-time peak of 1780, 1790 thereabouts?
No, I think that will take a lot of time for HDFC Bank. So, one is in terms of price point that the stock may, or the momentum on the downside could get arrested. The price may stabilize. I think we need to just find out that level, and we'll wait out for the price discovery from the markets itself. I would probably sense 1600 could be a good point there. But then, what could happen is that the stock has now defined a range. So assuming if 1600, holds on for HDFC Bank, 1800 was the recent top approximately for the stock, which means we could be looking at the stock fluctuating into this 150, 180 point band for itself over the next maybe 1 or 2 months. So I think that's where a short-term trader should try and position. So try and buy the stock when it becomes oversold, and then look to buy sell or book profits when it comes closer to that 1750, 1800 mark.
Okay.
I think the problem with HDFC Bank is that it's tested your patience for so long that you've run out of any first sign of any weakness, and you are like, okay.
Actually, first cut after a large rally perhaps may not be the right. But once it gets into that 1350, 1400, I doubt will it go there. But even 1450, 1500, perhaps you could look at it. Not the first fall like it's happening today. There are some very interesting consumption movers today. Restaurants brand Asia, which houses a lot of Burger King, Taco Bell, all those kind of franchises have come back. Nuresh, look at that RBA at 113. How does it look like?
So the stock has been a very boring one in terms of the amount of spikes it has done over the last 1 year, but overall does not sustain. So there were blocks almost 6-8 months back at 120. Then it dropped. Again, there was a pullback to 120, 130, then dropped to 100 levels. Now also there are volumes in the last yesterday as well as today, but till the time it doesn't sustain 125, 130, it continues to be a range bound stock. Once it crosses 125, 130, there could be a total view change.
Right. Okay, we were just talking about the bright spot in the market right now. And the Defense Ministry said that the country has actually registered the highest ever growth in the value of defense production in 23 to 24 year, and that the Make in India program is now crossing new milestones. Remember, the minister had said that they are targeting defense exports worth about 50,000 crore rupees. In fact, my colleague Prakash joins in with more details on that.
Yes, a very positive development coming in for the defense sector as there is a significant growth in domestic defense production numbers. The Defense Ministry has come out with the details of the domestic production numbers for the financial year 2024, which has touched a record of rupees 1.27 lakh crore. Therefore, there is a significant growth of around 16.7% in the financial year 2024 as compared to the previous year. The value of defense production was rupees 1,08,000 crore in the financial year 2023. If you look at the specification of defense production numbers, of the total value of production in FY24, about 79.2% has been contributed by the DPSUs and other PSUs, and nearly 21% has been contributed by the private sector. Therefore, there is a steady growth in the domestic defense production. In last few years, the value of defense production has increased by nearly 60% in last 5 years. Now coming on to export numbers, we have clearly seen a significant growth in defense export as well. The number has crossed rupees 21,000 crore in the financial year 2024, which were nearly 33% higher than the last year. So it's a very significant development coming in, and the Prime Minister has also lauded the performance of the defense sector and has reiterated its commitment that the government will create a conducive environment for the industry to flourish, and India will be established as a major defense manufacturing hub.
They're about, I think 60-65% of the index will be large and mid cap, and about 35% will be small caps. So the opportunity is in both sides. You have obviously small cap names that are getting very healthy order books. One of the ministers announced that we want our defense exports to be upwards of 50,000 crore by the end of the decade, in about 5 years' time. So I think that also is a big impact, big sort of driver for this index. I also agree with the fact that order books are very strong, and order books obviously don't affect your P&L balance sheet. They're just so the only way you're able to make order books into reality, which is P&L balance sheet, is to expand capacity. So I think the ability for these companies to really go out there and make sure that their manufacturing capabilities are expanded to cater to these order books will really determine their stock prices in the future.
And we have headroom to almost 700,000. So that is the kind of opportunity we think lies ahead of us. Why do we believe so? As Rakesh was saying, we already have CNG three-wheelers. You are perhaps aware that in the three-wheeler segment, Bajaj is almost 80% of the market. Again, no mean feat, because this is one of the largest three-wheeler markets in the world. And perhaps you are not aware that over 60% of all three-wheelers sold in this country are now CNG three-wheelers. So you just heard me say that maybe 20 years ago, there were no CNG three-wheelers and there was one fuel pump. And now over 60% is CNG. In our own portfolio, I think CNG is almost more than 70%. I am told that in the major cities where there is adequate availability of CNG, 30% of car sales are CNG now. So if you just turn these figures around in your mind, if 30% is the penetration that CNG motorcycles achieve, I'm not saying that everybody will buy a Freedom, but as an industry, if 30% is the penetration CNG is able to achieve in the motorcycle segment, then that's 30% of 700,000 is almost 200,000 motorcycles. If it's as high as 70%, it's almost 500,000 motorcycles. So the question before us today is that could, in a period of time, obviously these things take time because consumer behavior has to change with us working as a team. But could it be that in some years, 70% of the market would be CNG motorcycles? And I think there will be only two types of people in the room who will answer this question. Those who will say no, and those who will put up their hands to say yes, but they actually don't mean yes. And the reason I say this is because when I joined this company, 70% of two-wheelers in this country were scooters. And everybody I met in this company and all of our dealers said that that will never change. It will always be scooters. And if you attended some of our previous launches, you would have heard me say that they gave me lots of reasons why it would never change. They said a scooter is so comfortable, convenient, I can sit on it with my dhoti, with my lungi, my wife can sit sideways, she's got a spare wheel, she uses it as an armrest. Fortunately or unfortunately, she won't fall off the scooter. There is a luggage space over there, a helmet box where I can keep stuff. My gears are on the hand, I know what gear I'm in, and so on and so forth. So there was apparently no reason for this country not to remain a scooter country. But as you know very well, through the 90s, in a matter of 5 years, it went from being 70% scooters to becoming 70% motorcycles. So what is the lesson here? The lesson here is really, in a somewhat philosophical sense, that it's not the lots of little things that make a difference at the end of the day. Sometimes a particular event takes place, as it did in 1993 when fuel prices went through the roof and Hero Honda came, or rather was present there to take advantage of the situation with a 4-stroke motorcycle. In the same way, 10 years later, the Supreme Court mandated CNG for Delhi in commercial vehicles, and Bajaj was present there. We've taken advantage of that. Question is whether a hat trick is impending, is about to happen. That again, fuel prices, as the minister confessed, are very high, 120 rupees a litre, and this is hurting people. And if, as Sarang said, this can halve fuel prices, then it could be that this is again one of those milestone moments which in MBA schools is taught as disruption, and these kind of fancy words are used. So maybe we have a real opportunity for change over here. So.
All right, let's take that discussion forward. That was the rationale for this bike shared by Rajiv Bajaj. But Alok Agarwal is now joining us from Alchemy. Alok, afternoon. Thank you so much for your time. What's your take on the commentary coming in from Rajiv about the category breaker this particular CNG bike could become? And it's first of its kind. Clearly, you have full marks for that. The stock is higher by 2%. But what does it do to this category? This value category, 85,000-95,000 per unit value category, was ignored by everybody. All the players were focusing on premiumization. Can it revitalize that space and get volumes back?
Yeah, hi, good afternoon. Yeah, we have been seeing a K-shaped recovery all through, especially after the COVID, and that was reflected in the automobiles, in the two-wheelers as well. But at the same time, one of the most efficient companies is coming forward with the CNG kind of bikes. I think it's a welcome step, welcome move. It's a calculated move as well, and they have also showcased how they have changed things in the past. So I remain upbeat and positive about the changes. And yes, at the same time, there are increasingly green shoots being visible on the lower end of most of these consumer products as well. And this change is coming at the right time, possibly better growth ahead of us.
Right. The other area I would like your opinion on is large cap pharma. In fact, today, the second day when we are seeing even Laurus's of the world, the mid-tier ones coming back. But essentially, the move was started by large cap. There was an upgrade by Kotak on Lupin recently. But the gist is that the US generic market is reviving, pricing pressures are going on. But haven't the stocks already moved very well in the last 6 months? Would you be okay holding these stocks now if you have bought, or would you be tempted to book some profits, or there's long runway even from here? Large cap pharma.
In some pockets there are, especially as you mentioned in the US markets also, the generic prices are getting a little more steady. If you notice in the last 9 odd years, barring 1 or 2 years post-COVID, mostly the pharma sector was actually remaining quite subdued after a big run prior to that. So with the generic pharma prices in US stabilizing now, that's a big positive. At the same time, in some of the manufacturing setups, especially like CRAMS and CDMO spaces, especially India's capabilities are rising. At the same time, China Plus One opportunity also ensures that the growth visibility continues to be good. So I would not say for the whole sector, but in pockets, some of these companies look quite good.
Alok, we've been talking about, in light of especially the defense minister's commentary as to what really the entire defense pack holds. I mean, it's for everyone to see the kind of move that you've seen, and parabolic at that, in the entire defense pack, and especially in select names like a Cochin Shipyard, Mazga Dock, etc. But for a long haul, and I would restrict it to the next 1 to 2 years, would you say that the best of the rally is behind us, or would you say it's good time as any to get into these names and still have significant headroom ahead of you?
No, especially when a sector is having a large structural upside in terms of growth, it's very difficult to call out a year or a very near-term move. But I must mention, with all credit to the government as well, by ensuring 75% of the total acquisition budget is now given to the domestic companies, tie-ups with nearly 40 companies, tie-ups with overseas OEMs as well. The last year, FY24, the defense exports were nearly $2.6 billion, up 32%. We haven't seen that. In the last 10 years, the total defense exports in India were 21 times of the prior 10 years. So the numbers are looking good. We must not not look at the fact that defense expenditure is one of the largest expenditures in the budget for the government. Earlier, majority of this part was for operational expenses and imports. A large part in that is coming in the domestic side. The sector is just opening up. From the vantage point when I am seeing at, I do see maybe a decade plus of easy growth coming in there. We may see much more companies in the ancillary space also coming through. So we remain extremely bullish on the sector. Can't say about a very, very short-term move, but the long term looks quite beautiful there.
Looks beautiful. Clearly, I mean, somebody was telling me, putting in perspective, that the amount of growth you've seen in the last 3-4 years, 50, 60, 70, 80%, but we are still importing more than 50% of our actual requirement. So that's the kind of, well, the stock market may have factored in a lot in certain cases. Look at Masgard down 1 lakh crore MCAP. What are the under-owned areas, Alok, where you are now nibbling in our early studies?
So very interestingly, this market's pretty divided into two parts. And we saw a major sectoral leadership change happening, especially from the end of 2021. Prior to that, a lot of consumer-facing companies, the FMCGs, the ITs used to rule the roost. They are having cleanest of balance sheets in the prior decade and better ROEs, as well as maybe a 10-12% earnings growth, but that looked quite good compared to 6% growth in the market. Things are turning around now. The other parts of the market, which were almost sleeping for 15 odd years, they have been rising. There's a reason they have been rising. We are seeing an increasingly higher concentration by the government on the same. They are serious about indigenization in various sectors. They are serious about making India programs, and we're seeing that CapEx leading the way, and the payment numbers also coming through. So some pockets, I would say, that still in the power sector, in the real estate sector, and some of these domestic cyclicals, there are still a lot of people, a lot of areas which are still under-owned. I must highlight, say we spoke about defense, which is the largest, one of the largest expenditures for the government in the budget. It's not really there in any index. If you look at the largest, biggest employer in the country is Indian Railways, not really there in any of the sector, in any of the main indices. The largest outflow for a typical household in India is for their house, and real estate is hardly there in some of the major indices. Some of these sectors were really, really sleeping for 15 years, coming out of deep slumber. We do see long runway of growth in some of them. That's why they remain under-owned compared to the potential that they have, compared to the overall economic impact they have.
Alok, stay with us. Lots more to talk about with you, but we're going to do that after this very quick commercial break. Right, back with closing trades right here on ET now. Still under pressure for HDFC Bank. That's been a sort of no-go today. In fact, Alok wanted to talk about that with you, right? Because of the MSCI headroom, there were to be inflows of about $3 to $4 billion coming into HDFC Bank. And just one soft quarterly update, and we've knocked off, 7% nearly in just 2 trading sessions?
So, hi, although I can't really talk about a specific stock, but I must say that, there's one side which is the fundamental business strength of companies, and we have been seeing for certain companies, they have been kind of losing market share, and the growth rates have got a little more subdued compared to the habit that we had all developed about certain companies, that they would deliver high level of growth. MSCI inclusion kind of data, definitely it has a big impact, especially when the numbers are maybe 5-6 times of average delivery volume of the day of a stock. But on the long run, ultimately, it's the earnings and the growth that matters. And that's where I think we would try to place our bets on. So yes, this sector, especially in the banking sector, we have seen that the trinity of high credit growth, better margins, lower credit costs, that played out so beautifully well in the last 2-3 years. But can all three remain strong going forward? That's where some of our doubts are. Sometimes for the sake of growth, margins may get through. And maybe for the sake of margins, sometimes growth may get through. And then comes the higher yielding kind of area of personal loans, etc. So we do need to watch the space a little more carefully about the companies who can deliver profitable growth at a lower credit cost.
How are you positioned as far as some of these NBFCs are concerned, big or small? The data, the Q1 data has been coming out pretty mixed, not throwing up any clear trend. But the previous quarterly data showed that this is one space which is outgrowing the banks. Asset quality is still under check. Some of the valuations are also on the favoring side.
The way we would put it is, let's zoom out a bit. The last cycle and the previous decade was more of a consumption-driven growth in the country. And hence, a lot of value chain around consumption did pretty well, including the consumer lending. This cycle looks like is more predominantly driven by the capex-driven cycle. And there could be a very high chance that the capex lenders do pretty well. So some of those are coming in the form of NBFCs, which are more and more capex-oriented lenders. But also because the same thing did not work in the previous cycle, we have seen how a lot of wholesale lenders got converted into retail lenders. And we are now seeing, sitting on huge books, a lot more growth coming in at quite lower margins as well. Do they really price in the kind of credit costs that need to be priced in? That because of the higher supply needs to be seen. So within the NBFC space as well, our bet is more on the capex-oriented lenders rather than pure play retail financiers. Having said that, some of them are really marquee companies within the retail financing as well, where we still remain bullish.
Right, okay, that's the word coming in on some of those financials. ONGC holding out, Britannia holding out. There's, of course, Bajaj Auto, which is now at 9,700 thereabouts. SBI holding up a solid 2% as well. But just wanted to understand right now, Abhay, whether or not you have any sort of distinction within private banks and PSU banks. You were just talking about private banks, though. But does it really make sense to make any of these distinctions, or would you say just play the bottom-up stories?
So the distinction was pretty valid in the prior cycle, where the private banks were not only gaining market share, they were having higher growth, they were having better margins, and they were having lower credit cost. Everywhere they were beating PSU banks hands down. But having seen the worst of the times behind them, some of these PSU banks have actually come out quite winners in the way they have turned around their own businesses. We used to see the prior cycle was marked by a lot of capital raised by PSU banks, but those were almost like funding for existence. Now they come out with a capital raise that is more like funding for growth. And markets generally like somebody raising money for growth rather than just for existence purposes. We do think that not all of them, but few of these PSU banks have really turned the corner significantly. Their growth numbers are good. Some of them are having reasonably good margins, and the ROAs have also improved significantly. So yes, the gap between what the perception value of a PSU bank and private bank today is, that gap is much, much lesser than what it was maybe even 5-6 years ago.
Great to have you then on the show. Thank you so much for taking the time out and speaking with us today.
Thank you.
Okay, that's the word coming in from Alok Agarwal. In the meantime, let's just take in some closing strategies as well. A sharp recovery on the index. Kunal, what are you spotting for closing trades?
So there'll be a buy on Biocon. That's a chart as well as a stock which has done pretty well for itself. Now trading at 370 plus mark, already at a multi-year high for itself. And looking at the way the pharma stocks and the sector has rallied, I believe Biocon could probably also do pretty well for itself over the next few weeks.
Right. Naresh, what closing trades are you identifying?
So that would be a buy on Reliance Industries. After that breakout, did a consolidation, and now a flag formation breakout today, new 52-week highs, new all-time highs. So expecting a move towards 3,300 going forward.
Okay, let's get you some dealing room chatter as well. And Sharad, as always, is waiting by to tell us what are the stocks which are being talked about this Friday afternoon. Sharad?
Well, yes, in focus is Suzlon Energy, and what we are gathering from dealers is buying is coming in from the HNI segments. Now, interestingly, the stock has hit its intraday high levels on a 13-year high basis, and for the 5 straight sessions the stock has been in green. This is the biggest gaining stream since the last 6 months. Now interestingly also our channel checks are suggesting that the large order win is expected for Suzlon, and this would be coming in for the large size capacity. Interestingly, company recently hired the CEO of the manufacturing division, Guru Pratap Boprai. Interestingly, he led the automotive business on M&M in the European markets, and he was also instrumental in getting a lot of permissions from the Maharashtra government, especially when he was working for Fiat and subsequently the Volkswagen Group.
Okay, Sharad, thank you so much for that. So a lot of buzz around that wind energy, turbine maker. But for the markets, yes, we are now edging towards 24,300 on the index. Though the bank Nifty continues to be under pressure. ONGC is one stock which has managed to see a bit of a spike today, 4% higher. There's also a lot of chatter and interest around, Jio as far as IPO is concerned, and that's the reason why Reliance 2 is in focus right now. Kunal, as far as this ONGC, Reliance, the entire energy basket is concerned, which is your favorite amongst those?
Well, Reliance, of course, is one of the top names over there because the stock had not moved much over the last 6 months or so. And I think very recently, last week or so, we'd seen a breakout about the 3,000 mark for Reliance Industries. So in terms of price potential, as well as the stock coming out of a major consolidation, the near-term returns could be far more better as well as quicker for Reliance Industries. But nothing takes away from the trends for ONGC as well. When you look at this over the last 6 months, 1 year, 2 year chart pattern, the stock has done exceptionally well. And remember that ONGC is a very low beta stock erstwhile, and for the stock to come back into high beta mode, getting into breakouts every now and then, trying to absorb major corrections and then make a comeback in a V-shaped recovery. I think that's been the hallmark for ONGC over the medium to long term. So both the charts are attractive. Reliance Industries, of course, from a short to medium term play could probably come back to the 3,300, 3,400 mark. ONGC as well, I would probably believe 300, 305 could be in the offing pretty soon.
Right, okay, that's the take coming in some of those energy names which are holding out very well. But Bajaj Auto has only been moving from strength to strength, almost like a pair trade like we were discussing earlier with a Hero MotoCorp, because look at the way the kind of steep fall that you're seeing in a Hero MotoCorp and Bajaj Auto now sitting at the day's highs. Hero MotoCorp also, I stand corrected, has seen a bit of a recovery, but it's almost been a bit V-shaped at that. But Naresh, within the two-wheeler space, is Bajaj Auto clearly the strongest of the lot?
Yes, it has been the strongest one for quite some time. The stock has actually doubled in the last 1 year and continues to hold on. It's just that after hitting that 10,000 mark, the stock has consolidated. And if it crosses 10,000, then the trend again gets into momentum. Similarly, Hero MotoCorp has also gone up almost 100% over the last 1 year, a little less than 100%. But the stock is again consolidating. So for now, trends are up for both, but I think they could consolidate in a range-bound move, say 5,400 to 5,900 and 9,200 to 10,000.
That's a view on some of these two-wheeler names. But Abhay Agarwal, founder and fund manager, Piper Serica, also joins us on the show. Abhay, I understand you're a big cricket fan. You managed to get your hands on that bat, which was signed by the winning team. But did you find yourself yesterday at the Marine Drive as well when the team was taking a victory parade?
Yeah, no, so fortunately, I got to spend, some time separately, so I didn't have to be part of the crowd. But I would have loved to be part of that crowd, so much of positive energy, big welcome back to our heroes. And, especially coming off the final loss in the World Cup to Australian team who we had defeated earlier in the same tournament in the 50-over World Cup. I think it was remarkable. I wish I could have been part of, the celebrations yesterday on the streets, but unfortunately I could not. But yeah, we celebrated anyways, and we'll continue to celebrate, I think, for many days to come.
Abhay, we were just wondering what that bat is going to turn out to be in terms of multi-bagger in the next 10 years.
Yeah, I mean, it's these are things which are just priceless. I mean, you can't put a price on them. They're signed by all my heroes, starting from Kohli and ending with Rahul Dravid. So absolutely, it's a prized possession that I guess will stay in the family for decades.
Indeed, a family heirloom now as far as that bat is concerned. But let's talk markets, and which are those stocks which are you probably going to keep in the family for a long, long time. HDFC Bank is a stock that everybody used to think forms part of that family jewel per se. You also had the likes of Titan, etc. But all of these defensives are coming under pressure right now. Do you think it's time to probably churn the portfolio? But if you have a long view, just stick with them. What's the view?
Yeah, so I think on HDFC Bank, and not only HDFC Bank, on all the private sector banks, again, not a buy or sell recommendation. So we don't have HDFC Bank in our portfolio since January last year, once they announced the merger with HDFC Limited. And the reason is that we could see that for the entire large cap private sector banks, the peak NIM is already behind us. You know, we see margin compression. The cost of deposits is going up. The deposits themselves are not going up. So the cost of funds is going up. At the same time, there is pressure from RBI to transmit the rate cuts down to the borrower level. So in that scenario, it is very clear that for next year or so, you will see a margin compression. You will see a slowdown in business till the private capex picks up big time. The credit offtake at enterprise level will slow down. So baking into all that, and plus looking at valuations, which are still not cheap despite the sideways correction, you know, still looking at 2.5 times book value multiple, making these banks the most expensive banks in the world. We have stayed away from private sector banks. Only bank we had was ICICI Bank. So that is a space that we are not in a hurry to get into. We'll watch. I think it will go sideways for some time. But what is exciting for us is looking at some of the sectors that investors are not looking at, you know, insurance, both life and health, agrochem space, small companies, big companies there. I think there is a big focus already from the government on agri, increasing the farm level income. We are looking at good opportunities in pharma space, especially pharma generic exporter companies, which have not done anything for many years. So I think there are opportunities in the spaces that have not been market favorites. And I think that is where money is to be made over the next 2 to 3 years.
You know, since we're on the subject of pharma, Abhay, wanted to get your views on Emcure as well. Great subscription. Just few hours left, I think, before the IPO closes. Is it a subscribe still?
I think so. I think the market has appetite for new listings, and Emcure is a company that is what I would call is a very established company. They haven't really hit the growth bucket over the last 3 years if you look at the numbers, but I think very experienced management team, very solid market presence. And I think the market has appetite for these larger mid-cap companies that are listing now. So not surprised to see the subscription levels. And I think the listing also should be quite positive for a company like Emcure.
If you're coming in for now, the market is actually doing quite well. In the last few minutes, there has been a vertical rise. So 24,350 on the cards, and it warrants a look as to what's driving this last minute rally. I think Reliance will be the one which is perhaps seeing a bit of a spike, because there's this news doing rounds about a Jio IPO happening soon, and that's the reason that stock has seen a very sharp spike right now, 2.5% for Reliance, and when that moves, of course, the rest of the index has to follow with it. Abhay, the other big theme that we have been talking about for the last 12 to 18 months, and it's fairly discovered now, is manufacturing and defense, and even electronics, manufacturing, etc. as well. Do you still find value within that basket?
So I think manufacturing as a theme we are very bullish on. I think that's almost a decade story from here now. It will continue to play out. Now, some parts or some segments in manufacturing will obviously find fancy at different points of time. Defense and PSU manufacturing is definitely right up there as far as market fancy is concerned. And I think that's one of the reasons that some of these stocks are building in future returns into the current price. So I don't know how much return juice is still left for investors who want to come in right now. But if we look beyond defense, and if you look at core manufacturing as a segment, especially the manufacturing companies that are exporting, I think there is a tremendous opportunity there, especially for electronic component manufacturer, electronic manufacturers. I think for the first time, we are seeing through our channel checks and company discussions, large electronic manufacturers in India are accessing the US markets directly, not through tie-ups. And I think all this will start showing up in their numbers. And I think market will start recognizing that also. And Other than that, the outsourced manufacturing of electronics is a big theme that has already played out and still playing out. So I think overall in manufacturing, it's a long way to go in form of returns are concerned. Investors should look at what is still not caught fancy, but is promising to really make money in that space.
Thanks, Abhay, for joining us on the show. And also congratulations on sourcing that very valuable bat from the Indian cricket team. It's been talk of the town. All right, let's move on and go to one of the other favorite contributors on the channel, that is Saurabh Mukherjee. Marcellus Investment Managers have actually come out with a very interesting note. They are, renowned for deep dives in various themes and subjects that they keep researching along with the team. Now Saurabh's team has come out with a note which talks about how you should look at investing in New India. So the conventional, way of thinking while approaching markets is getting challenged. And over the long term, how US actually, India and US, one of the two very good performing markets, and a lot of research has been done around it. Saurabh, what are the key highlights of this new report and research study, and what triggered it more so?
Right. So I guess to be honest about the fact what triggered it is after COVID, especially in the 2 years after COVID, we realized that there are investee companies, whilst they were continuing to generate 20% profit growth, there were a whole ecosystem of smaller companies, right? As we subsequently discovered, around 6,000 smaller companies who were growing profits at 30-35%. And these were not PE or VC funded companies. These were perfectly ordinary smaller companies who were growing profits at a rapid rate. And as we realized this, as we realized it to 2023, that a new India is being born. We call these challenger franchises, Ajay. These are roughly 6,000 companies below the top 800. The top 800 companies are the rulers. They make profits of around $60 million. This is basis the government's corporate tax data. 800 companies in India make $60 million or more of PAT. They account for 70% of profits. These are the dominant franchises in the country. But the fastest profit growth in the country is the 6,000 companies below the top 800. And we realize that these 6,000 companies account for basically the other 20-25% of India's PAT. And they're growing profits at 30-35% in almost every year post-COVID. Now, what's resulted in this rapid growth among smaller companies? Remember, we're talking here about challenger companies with profits between, say, $5 to $50 million, right? Between 40 crores to 400 crores, right? Effectively, companies like Marcellus actually. These companies have benefited enormously from the rise of mobile data, the rise of UPI, the rise of high quality infrastructure and GST. The combination of these forces has democratized profits. It's allowed smaller companies to pull away profit pools from the larger companies, the rulers, but most importantly, even tinier companies, companies with profits below 1 crore, those guys have really suffered. India has roughly 1.4 million companies who make less than 1 crore of PAT. Those guys have lost their profits to these challengers. And next up, I reckon in the next 5-6 years, the challengers are going to come after the ruling dominant franchises in the country with disruptive, lean, efficient models.
Amazing point, because I've been always under the impression, and in fact, you were the one who drew our attention towards, still 5-6 years back, you said, Ajay, 80% of the profits are made by 20% of the companies, right? So this is a change in stance that for whatever reasons, and I want you to, highlight the factors. Up till now, it was just the biggies were actually having the largest profit pools. Now you're saying true democratization of profit is happening, and these challengers will come back in a roaring manner?
So absolutely. So it's not so much our change in stance, it's change in the data that arises from the government, from corporate profitability. You're right. Till 2020, we were seeing consolidation of profit pools in the hands of 20 very large companies. The last 4 years, the post-COVID era, has been about democratization of profit pools. But to be clear, it's not democratization to everybody. It's democratization to roughly 6,000 companies who are below the top layer. I call it the second decile. The second decile of India Inc., companies with profits between 40 crores to 400 crores, that's where the fastest growth is. And our research is suggesting that the reason these smaller companies are now booming, they're flourishing, is high quality infrastructure, both physical and digital, the rise of AI, the rise of top quality infrastructure even in small towns. That's lowered the cost of doing business. It's lowered transaction cost, it's lowered frictional costs, and that means that smaller company can be on a level footing to a company which is, say, in the Nifty, and the smaller company often has a lower cost structure, has a better business model, perhaps more use of tech and digital to grab customers, and they're going forward and disrupting it. To the extent that the larger companies are being able to participate in this disruption, the larger companies who are doing so are those who have a challenger franchise inside the business. So a classic example would be Trent building Zudio. And that's, I think, no surprise that Zudio has prospered in the post-COVID era. Trent's ruling franchise was Westside. Their challenger franchise is Zudio, and Trent is very smartly locked into this challenger ecosystem. Similarly, say Tube Investments building out the entire EV ecosystem that they're building, two-wheelers and trucks and tractors and so on that they're building. So large companies who are benefiting from the challenger ecosystem are those who are seeding, financing challenger subsidiaries. But more generally, both in listed and unlisted, there are several smaller businesses coming through with profits around 40, 50, 100, 200 crores who are using the new India, new digital and physical infrastructure to create beautiful business models, highly profitable compounding machines. And our job increasingly the last 1 year has been to load up on these new businesses as India's profit landscape changes dramatically.
I mean, this calls for a much longer discussion, Saurabh, but unfortunately today we have lesser time. But before that, another big observation from you in this communication is about rise of the urban women. I mean, we've been talking about women's role in voting, women's role in consumption, but you're talking about the urban women who have their finances in their own hands much more. Grip is better. Talk to us about how important this part is.
So, these are related. The challenger ecosystem, new digital, new physical infrastructure. What's done is it's allowed women to capitalize on commercial opportunities through the mobile phone, through mobile and e-commerce, right? So the government's data is also showing that creation of small enterprises, creation of self-employment opportunities is far, far greater amongst women now than amongst men. It's actually stunning how sharply women have pulled away from men in terms of creating small enterprises and self-employment opportunities. That in turn is related to the fact that at every level of the education system, primary school through to university, more women are studying than men, and the pass rates of women are better. So women are better educated, they are more able to start businesses, do business on mobile commerce, on mobile data, and also in corporate India. If you look at increasingly not just white collar office spaces like yours and mine, but also factories. Entire factories are now run by women in places like Pune, places like Hosur. So both in the industrial ecosystem and in the services, professional services ecosystem, women are getting increasingly the best jobs. That's resulting in more money in the bank. That's resulting in lower delinquency rates for women. And naturally, therefore, investors like us are very interested in this. We want to make money from investing in the companies whose products women are buying. And we also want to make money by having more women customers.
Right. All right, Saurabh, thanks for joining us. This is indeed a very interesting way, and you've given us a lot of material for researching and showcasing these companies, the 6,000 companies, fast-growing companies which are benefiting from this change in environment. Thanks very much for your time. Meanwhile, before closing and before I hand it over to Vinny, I mean, we must tell you that there's a very sharp short covering which has just occurred in the 5-10 minutes of our interaction. Very sharp. Just pull up, yes, that's what I'm talking about. Sharp rebound coming in on the Nifty. 24,340 is where we are right now. Bank Nifty will also come up on your screen. Very sharp rebound coming in there as well. So it's Reliance actually which is leading that rebound, by the way. I must tell you, it's not that the HDFC Bank has come back in a major fashion. It is 2.5% rebound in Reliance is leading to the index rebounding in trade. Nuresh, any view on the way very sharply Reliance-led rebound has occurred in the last 5 minutes?
So, if you look at it, the momentum was strong, and now the volumes are also strong, and there is a buzz of a possible GO, IPO, etc., both coinciding. So the momentum got much more faster above that recent highs of 3150. So positive on the stock could surprise further going ahead towards 3300, 3400.
All right. Thanks very much for that. So minutes to go before closing. Anisha is wrapping all the market action for us. Anisha?
Well, yes, what an entertaining week it was for all the news flow that we got and the fresh record highs that we made in the week gone by, right? With Sensex hitting the mark of 80,000. You had the Nifty hitting the fresh record highs at around 24,400. And don't forget the banking index also saw quite a bit of rally. And of course, the broader markets too really participated. Having said that, the star of the week was clearly the small cap index, which managed to gain almost 3.5% for the week gone by. But talking about just today, the biggest laggard in the trading session today was HDFC Bank. That stock was down almost 4.5% by the end of the trading session on account of a miss coming in on a Q1 earnings. But that got negated by the big push that we have seen on Reliance Industries today. That stock was up almost 2.5%. Especially given the reports of Jio IPO around the corner, so that stock saw quite a bit of fillip. You also had defense names seeing quite a bit of participation today, so a BEML, a Data Patterns, MTAR Tech, Cochin Shipyard, RVNL for that matter, and the entire PSU basket, to be honest, was fairly active. In fact, sales from the metals pack also saw quite a bit of traction, and then you had ONGC, which is up a good 3 to 4%. Overall, Titan was one of the laggards. We were expecting the Q1 updates to come anytime over the weekend. And interestingly, just ahead of that, Kotak has gone ahead and downgraded that stock. So that's something to watch out for. It's a reduce now versus an ad coming in on Titan today. So that's one stock which is down. Raymond, that one was a high flyer today. The demerger of the real estate arm clearly worked well. So at one point of time, that stock was up almost 15-16%. It's off the highest point of the trading session, but still above 10% mark. You also have Mahindra Life, which has closed the two deals, which was worth almost 2,000 crores. So that stock is in focus. You had a 2% gain there. Some of the data center plays, the likes of Blue Star, etc., were active in the trading session. A smaller stock called Black Box 2 was in focus. So some of these stocks managed to end with decent amount of gains. Second day on the trot, Kaya was one stock which was in focus. That partnership with Marico has definitely worked its wonders on that one. You also had QSR Space, which was buzzing around. So our Restaurant Brands Asia, which saw a large trade today, even Westlife for that matter. These were some of the stocks that we were tracking. Ixigo, which reported its Q4 earnings, was also one of the stocks which was on investors' radar. So clearly, the day was filled with a lot of these big buzzers. Yes Bank also deserves mention because of that 11% gain that we saw. Ircon was a candidate for an order win, so that stock was up 10%. Vardhaman Textiles, New India Assurance, Railtel Corp and Thermax on account of that order win were some of the other big buzzers. But it's not just about today, even the week overall has been quite steady, especially for the pharma names. We have seen very good traction for the likes of Zydus. Wockhardt has been having a dream run of sorts. You also had other names within the system like a Loris Labs, etc. gain quite sharply in the week gone by. One of the best performing sectors for the week was oil and gas, so ONGC, Reliance. These were some of the heavyweights which were pushing that higher. Don't forget Castrol for the week. Today it might be tempered, but if you look at the week-to-date move, Castrol definitely had a very good run. On the losing side, however, some of the PSU entities were coming under pressure, and then banking names didn't really do much. M&M, for instance, was also down for the week. You also had Ultratech Cement coming under pressure, Bajaj Finserv, Airtel, Adani Enterprises. These were some of the big losers for the trading week. Bajaj Auto deserves a special mention for the week gone by on account of that CNG bike launch happening. It is the first bike which has got launched across the globe. Very good traction. The price range is 95,000 to 110,000. The other incumbents, the likes of Hero, TVS, etc., were in focus on account of that, because remember, this is a category disruptor here. This is the first time this bike has been launched, and you heard the comments from Mr. Gadkari as well as Mr. Bajaj in the press conference. Very, very enthused with the possibilities of the amount of traction it can gain. So overall, that was the trading action and the trading week. 24,300 scaled as far as Nifty is concerned, and the Sensex too above the 80,000 mark. Next week is also going to be fairly important. Stay tuned to 18 Hour to track as to which are the big events and what happens in the coming week.
If you like this video, then like, share and subscribe to ET Now.